Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 28th of July. FOMC, positive tone, but nothing about hikes this year. The FOMC remained on hold yesterday, as was widely expected, with Kansas Fed President George returning as the lone dissenter after she withdrew her hike vote in June. The committee appeared far more optimistic than in June and added a new phrase in its statement saying that near-term risks to the economic outlook have diminished. In our view, officials are now much more comfortable in raising rates this year, and if economic data continue to prove supportive for the US economy, expectations for the next action are likely to come closer. However, the committee did not clearly specify if September is back into the game, or at least if it sees the next move by the end of the year, disappointing those who were looking for such clarity. The result was a weakening dollar, even though several hawkish points appeared in the statement at first glance. Moving forward, market focus is likely to shift back to incoming US data, as well as speeches by Fed officials that can help investors gauge whether a move this year is indeed on the cards. With regards to forward guidance, the most important forthcoming event may be Chair's Yellen's speech at the Jackson Hole Economic Symposium in late August. In a similar fashion to her speech at the Economic Club of New York in March, the Fed chief could outline her own expectations on the rate path and what the committee would need to see before taking action. Overall, officials' indication that the risks to the outlook have diminished reinforces our view that both September and December are realistic candidates for a rate move, but we still view December as a more attractive choice for the Fed. Even though the latest statement keeps the door open for a hike as early as September, that meeting may be too soon for the FOMC to be confident that the Brexit vote has had no effects on the US and that the latest streak of positive data will continue. With regards to a November move, we consider it unlikely that the FOMC will risk hiking rates just a week before the US election, as that period is likely to be marked by elevated volatility. As for today, during the European day, Germany's preliminary CPI for July is coming out one day ahead of Eurozone's preliminary inflation rate for the same month. As usual, Germany's regional CPIs will be released ahead of the country's overall print, thus we will look at the larger regions for guidance on where the headline figure may come in. The forecast is for the national rate to have ticked up, something that may raise speculation for the bloc's rate to beat its forecast of remaining unchanged. Something like that could support the euro. Germany's unemployment rate for July is also coming out, and expectations are for the figure to have remained unchanged. In the US, initial jobless claims for the week ended on the 22nd of July are coming out. We have only one speaker on today's agenda, ECB Executive Board member Benoit Guerre. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.